So you want to earn money with your investments. I get it, me too, that's fine. But what if you also want to make a positive impact with your investments? Or at least not invest in companies that actually make the world worse? Well, in this instance, you can actually have your cake and eat it too. There is just a solution for you, and it's called impact investing. Let's check it out. Hello world! This is the Impact Investing Show, where we think and learn about how to save the world and improve the lives of all conscious creatures by acting today and investing into the future. I'm Lennart Schelter, welcome to the show. Today we're going to talk about impact investing, what it is, why it matters, and how to do it. Impact investments are investments made with the intention to generate positive, measurable, social and environmental impact alongside a financial return. Some prominent examples for impact investments are sectors such as sustainable agriculture, renewable energy, conservation, microfinance, and affordable and accessible basic services including housing, healthcare and education, for example. The GIIN defines three basic elements of impact investing. Intentionality, meaning that the investor actively seeks out opportunities that provide social and environmental benefits. Return expectations. Impact investing is not charity. It aims at identifying ventures that are not only self-sustaining, but that return a financial profit as well. And last but not least, impact measurement and an overarching focus on evidence and data for investment design rather than hype or gut feelings. Impact investing is not an asset class, it's an investment approach. These investments can be made in all types of markets, be it fixed income, venture or private capital, but also real estate or credit. They can be made in emerging as well as in developed markets through all kinds of investment vehicles and by individual investors just as much as by private foundations or pension funds. On this channel, however, we will focus on investments in publicly traded companies, since this is arguably the most accessible and safest option for retail investors like us. Why is impact investing important? Because your money is your vote. This is often called dollar voting and simply describes the process by which consumers' choices influence a company's decision. Imagine products and services that consumers buy will tend to be produced more and offered more in the future. Simultaneously, products and services that do not sell as well as expected will be produced and offered less in the future or even scrapped entirely. This can be seen all the way back to the American Revolution, when colonists boycotted several British products in protest of taxation without representation. And there are thousands of examples of products that are released into the market only to fail miserably, even if they are endorsed by large brands. Remember Google Plus, anyone? And in contrast to only electing your local government, by spending and investing your money intentionally, you can vote internationally almost without borders. Your economic power can influence the course of multinational corporations, but also support a local project if you so desire. This is true for your private spending as much as it is for your investment decisions. Stocks and funds that nobody buys will eventually collapse, which might be a good thing in many cases, if the company follows unethical business practices or simply just sucks. And if you are watching this video and are an active investor, chances are you are in a rather comfortable position financially compared to most people in the world. This means you have more money, e.g. more votes, to spend and thus a disproportionately large say in how the world should work. Just imagine having 3 votes while your neighbor Paul only gets 1. That's exactly what happens when you invest 3 times as much as Paul. And we all know, with great power comes great responsibility. As a side note, if you are really motivated, keep in mind that your insurance companies, banks, pension funds, etc. also invest money, and a lot of it. You can check how they invest on their website or even switch to another provider that invests more consciously. Look up the term divestment for more info in this direction. It's a very powerful tool. These pension funds and insurance companies are the really big players in the markets, so this might be as or even more important than your own private investments. So now that you are aware of your disproportionately large amount of power, how should you use it? Where and how should you invest? You can do impact investing in the public stock market by simply selecting companies you believe have a positive impact on the world that outweighs their negatives. While this is easier said than done, it is nonetheless fairly straightforward at the margins. Imagine a tobacco company. I don't really see where a tobacco company does any good for the world. It gets slightly trickier with traditional oil companies. Yeah, their business sucks, but we still require oil for some more years before we fully transition to renewable energy production and storage. Then there are large tech companies. Their products are often great and provide many benefits to many people, but they may be produced under highly questionable, if not downright abhorring working conditions. I'm a huge fan of Tesla. I think they do an incredible job at advancing our transition to renewable energy while also pushing the boundaries of artificial intelligence and efficient production. Nonetheless, malicious tongues could claim problems with lithium production, working conditions at Tesla, or Elon Musk's public behavior on Twitter, for example. So you see how it gets tricky quite quickly, and you have to find your own criteria with which to judge your investments. I'll hang on to my Tesla stock in the meantime. However, there is also an undoubtedly positive fringe. Since you know I'm not a believer in slaughtering animals for products or food, you probably guessed it, I'm talking about cellular agriculture. This is a very young industry in the very first stages of existence that nonetheless has the potential to uproot the entire agricultural and the food sector all within a decade. I find it very difficult to find downsides to producing animal products in the lab when compared to our conventional ways of artificially inseminating animals, raising them in horrifying conditions and slaughtering them after a fraction of their natural lifespan. Not to mention that these culture products will have much higher hygiene standards, will be free of antibiotics, use a fraction of the land, the water, the energy, and overall resources to produce, and they can be created at scale locally, regardless of weather or environmental conditions, and designed to our every preference. Be it in nutrient content, form, taste, look, the possibilities are endless. So at least for me, this is the very definition of impact investing. Funding an industry that will be instrumental and indispensable for eliminating human-generated greenhouse gases, ending the abhorrent practice of industrial animal agriculture, and providing healthier, more resource-efficient and even cheaper food for the people, all while offering an amazing investment opportunity with outstanding expected returns. What more can you wish for? Now I know that not everybody has the time or the motivation to judge each stock they find interesting by a million criteria to determine whether or not they consider them a positive company. And generally, you don't have nearly enough access to information about the companies as a retail investor at least to even make these decisions. I'm going to make an entire video about this in the future, but for now just know that there are already established frameworks for rating these companies and ETFs. For example, check out ESG-rated ETFs. ESG stands for Environmental Social Governance, and it's a well-established framework for rating these companies, and there are ESG-filtered versions of famous indices like the MSCI World, for example. In these ESG-filtered indices, the original index is reduced by excluding companies that don't meet certain ESG criteria, for example. You can also check the ESG guidelines by which these companies and ETFs are judged to get an idea of the things these rankings consider to base your own criteria on. Links down in the description. So to summarize, here are the most important points about impact investing. Impact investing aims at generating a positive impact in social or environmental terms alongside a financial return. It is an investment approach, not an asset class or a market. So you can practice it with any kind of investment, but also with your day-to-day purchases. Remember, your money is your vote, so use it consciously. There are no fixed rules to impact investing. Everyone has to establish their own criteria by which they judge their companies. But my suggestions for a positive impact with amazing financial opportunity is cellular agriculture. If cellular agriculture, cultured meat and so on are new topics for you, or you just want to keep up to date with the latest developments and investment opportunities in the space, stick around, because this is the channel for you. I'm going to cover the science, products and companies in the cellular agriculture space and keep you up to date with everything cellular. So don't just invest, make an impact. See you next time.